What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be talking about in this update are a little bit on the technicals, on the longer time frames, because we are finally starting to see exactly what we have been talking about and looking for since the last few months, and honestly since that run all the way up to 34 when we saw that halt in crime candles on the way down. So we're going to be taking a look at that so you guys are prepared going into next week. We're going to be taking a quick peek at the Ortex data. Again, there seems to be still something going on with it. There's a lot of discrepancies between the shares on loan, short interest, and we're going to cover that as well. We're going to briefly touch upon max pain for next week because it is a monthly options expiration period, and we do end up seeing a little bit of a difference in max pain on these periods, which I want to go over with you guys as well. But the two main things that I want to cover with you guys are, one, hedge funds are getting absolutely smoked in total this year, so we're going to cover that, and AMC is set up for a potential gamma squeeze, and not just sort of like a mini squeeze. When we're talking about gamma squeezes and what we're looking at on the options chain, it is looking incredibly similar to what we saw in June of 2021. But to preface that, gamma squeezes and any conversations around that are always a if this, then that statement. So we need to see price action come to the upside. Then we could really start to see that conversation about, yeah, we're most likely going to see some hedging from the market makers. And I'm going to give you guys some of those price levels to look out for in order to see that hedging. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So on Friday, AMC closed the day at $14.66, hitting a high of $15.32. Very solid day, up 1.24%. In the after hours, came up a little bit to $14.74. Now, when we're coming over to look at the technicals on the longer time frame here, here's what we're looking at. We have this 4-hour 1348 cross right here. We have closing candles above the 200 EMA, a little bit of consolidation here, and using this 200 EMA as a level of support. Now, there's another key thing that's happening here that we have not seen since the last pretty significant run back into the 30s. And when we take a look back here at this previous run, it's the 13 EMA in the blue right here crossing above this 200 EMA in yellow. What this allows us to do is use this 13 EMA as a dynamic level of support, similar to what we saw back here, before a potential significant run to the upside. Now, looking at what we're seeing on AMC right now, we're probably going to get this 13 EMA coming up a little bit higher. We could end up using this as a little bit of a level of support right here and then making that move to the upside. But again, guys, all of you guys that have been learning this strategy over the last 6 months know the deal with this. If you guys do want to learn more about this strategy, make sure you check out that link down below in the description and join us over there in the Discord. You guys have seen how successful this strategy has been for not only myself, but everybody else who is a member. Come and check it out. Now, when we're talking about the Ortex data on AMC over here, let me just pull this up right here really quickly. 17.58% estimated short interest. Now, we did see the shares on loan and the short interest start to come down before we were starting to see these runs to the upside. So these runs to the upside in the little move that we saw this past week, I personally would not necessarily say that is shorts covering. Maybe some of them decided to get out of a portion of their position. But again, when you think about and look at the data, I think in total right now, the shorts on AMC are up around $1 billion in 2022. So they're still green on their positions if there are new shorts coming in after that November cross down. So it wouldn't really make sense right now for them to start getting out of their positions because we haven't really crossed through those danger zones yet. And again, pretty high cost to borrow here, 15.66%, 13.21% on the average, and 10.79% on the minimum. Now, taking a quick look at max pain over here, going into next week, max pain's 15. Now, for this previous week, it was 13.50. When you do see monthly options expiration periods, there typically is more open interest on the option chain, meaning that there's more contracts being held. It's a more popular date for people to either be swing trading options or where they're going to be picking options if they're trading longer out. So we're going to have to wait and see where this goes. Again, max pain is not the end-all be-all of what is going to happen when we're thinking about price action on any given week. It's just something to keep a lookout for. Now, before we get into this conversation about hedge funds really having significant issues, I want to talk about this gamma squeeze situation with you guys. So when we pull up Stockholm Tracker over here, there are a couple of things that happened on Friday that were very, very important. When we crossed 15, we saw these calls in the money shoot up a very significant amount for this next week expiration date, and we saw the puts significantly decrease. So we saw a flip here where there were then more calls in the money than puts in the money. So the first level that we really need to get above in order to start really kind of looking at if we are going to see some more delta hedging for market makers from the calls running in the money and the puts running out of the money is $15 a share. Now there's 485,000 call contracts out of the money right now, which is absolutely insane. And when we come over and take a look at the actual options chain for AMC, a lot of these are concentrated, 173,000 of them at that $145 strike price. Now, again, those are pretty much useless right now. There is no bid on them. The ask is a penny, and the volume on these are, pretty significant for the furthest strike out on the chain. Again, these aren't doing anybody any good right now. You can see the delta is 0.0017, so these contracts are not moving. But when we come back and look at some of the contracts that are closer to the money, again, you have those 23,000 contracts at 15. Again, that's not that many in terms of a significant move. That's why 15 is kind of that first level to look out for, but 20 is going to be really important. We have 46,000 call contracts at $20, and when we look at the puts, 31,000. So that is a very, very big shift of potentially at the maximum 7 million shares about that would need to be bought in order to hedge the calls that the market makers have sold and unhedge the puts that the market makers have sold as well. Now, above 20, what we're looking at here is 25's got 13,000. Let's see, 30, not so many. We've got 15,000 over here. We've got a decent amount at 40. So really that key level for us is going to be trying to get above 20. Now that could end up kind of sparking those market makers to start buying, sending us a couple of dollars higher. Then we see more FOMO, then we see more options buying, and you see this vicious cycle start to continue. So 15 is going to be really important, and so is 20. Now talking about what is going on with these hedge funds in 2022 right now, hedge funds fall 5.9% in total in the first half of the year. So in general, the hedge funds that are getting hit the most are equity hedge funds focusing on growth, as we can see here. Equity hedge funds, mainly those invested in growth stocks whose valuations rely more heavily on future cash flows, those discounted cash flow models that we have been talking about, have been hit the hardest by market volatility. They went down 12.3% in the first half of the year, but outperformed the S&P 500, which fell roughly 20%. So they're still outperforming the market in total right now in terms of these funds. But in general, when we come down here a little bit further, gains, however, were limited to 37% of the funds, meaning that only 37% of hedge funds are green in 2022. Well, these individuals are supposed to be the smartest people in the room and in the industry. How is it possible that everybody and their mother is screaming that the market is most likely going to come down, and these large money, supposedly smart money investors are not able to either reposition their portfolios or adequately hedge themselves to all of these volatile moves and market downsides? So again, guys, that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great weekend, and I will see you guys in the next video.